Thinking about growing your money internationally? Not all countries roll out the red carpet for investors, but some make it incredibly easy to set up shop, protect your capital, and watch it grow. Today, we'll explore the top 3 countries where investing is not just possible, it's profitable, streamlined, and secure. We'll also break down the most promising sectors in each country and reveal which global citizens are taking advantage of these opportunities right now. Let's dive in. First up, Singapore. Don't let its size fool you. Singapore consistently ranks among the top nations for ease of doing business. Fast company registration, often within 1 to 2 days for standard companies, though complex applications involving regulated industries may take longer. Zero tax on capital gains, your profits stay yours. Generous government grants. Startup SG Founder offers SGD 20,000 to 50,000 on co-matching basis, while tech startups can access up to 500,000 SGD through Startup SG Tech. Strategic location, your gateway to the fast-growing ASEAN market with preferential trade agreements. Feasible investment sectors in Singapore. Fintech and digital banking. With one of the world's most tech-savvy populations and supportive regulations, Singapore is Asia's fintech capital. Biotechnology and healthcare. Strong government funding, including Astar's advanced biotech-based protein production grants, world-class labs, and access to skilled professionals. Renewable energy and green tech. Ambitious climate goals are driving innovation in solar, energy storage, and smart city solutions. Trade and logistics. Singapore's port is one of the busiest in the world, and its supply chain efficiency is unmatched. Which citizens are investing most here? Chinese investors seeking a politically stable base in Asia, Australians expanding into Southeast Asia, Americans looking for low-tax English-speaking hubs, or Europeans in tech and pharma sectors aiming to access Asian markets without heavy bureaucracy. For example, German logistics giants like Doxer and Rhenus have established their Asia-Pacific headquarters in Singapore, capitalizing on the city-state's strategic location and world-class infrastructure to efficiently serve Indonesia, Vietnam, and the Philippines. Next, Switzerland. Yes, it's famous for chocolate and watches, but it's also a powerhouse for innovation, finance, and global stability. Political neutrality and economic stability. Your investments are shielded from geopolitical volatility. Favorable tax regimes in certain cantons. Corporate rates from 11.8% in Zug and parts of Schwyz to 19.6% in Zurich. Highly skilled, multilingual workforce, perfect for global business. Cutting-edge research with CHF 2.6 billion R&D investment in 2024, including Roche's projected 14 billion and Novartis's 10 billion investments by 2026. Feasible investment sectors in Switzerland. Banking and wealth management. Swiss banking continues to stand as one of the most secure and reliable systems globally. Pharmaceuticals and biotechnology, home to companies like Novartis and Roche, plus unprecedented R&D investment growth. Luxury goods and watchmaking, a timeless industry with consistent high export demand. Tourism and hospitality, luxury hotels, mountain resorts, and wellness retreats attract high net worth travelers year-round. Clean energy, investment in hydro, solar, and wind technology is accelerating rapidly. Which citizens are investing most here? Middle Eastern investors seeking stable wealth protection. Americans moving capital for asset security and high-value returns. EU citizens from France, Germany, and Italy investing in biotech and luxury markets. Chinese investors acquiring luxury brands and real estate assets. Example: Middle Eastern investors are increasingly active in Swiss luxury hospitality markets, with major acquisitions in the sector, while some Swiss family offices are relocating to Dubai, seeking more favorable regulatory environments. Our third pick, the United Arab Emirates. The UAE has transformed from an oil-based economy into a global trade, tourism, and finance hub. Tax-free zones, zero corporate and personal income tax in many areas. Fast company setup, often completed within 48 hours to 2 to 10 business days. Residency visas for investors, 10-year golden visa available for AED 2 million property investment. World-class infrastructure and an international talent pool. Important note: all companies must register for corporate tax regardless of zero-rate eligibility, with strict deadlines to avoid AED 10,000 penalties. Feasible investment sectors in the UAE. Real estate. Dubai's property market achieved record AED 761 billion in transactions in 2024, with 217,000 investments reflecting 38% growth in investor numbers. Tourism and hospitality. Luxury resorts, theme parks, and cultural attractions draw millions annually. Technology and startups. Government initiatives like Dubai Internet City foster innovation across multiple sectors. Renewable energy. Masdar City and other mega projects focus on solar and clean technologies. Logistics and trade. Strategic location connecting Europe, Asia, and Africa via world-class ports and airports. Which citizens are investing most here? Indians dominating the real estate investment space. British and European investors drawn by the tax-free lifestyle and strong rental yields. Chinese investors expanding in logistics and hospitality sectors. Russians moving capital for asset diversification. Example: over 2,300 Indian companies now operate from UAE free zones, particularly in Jebel Ali, with trade volumes increasing 40% in 2024 under the India-UAE SEPA trade agreement, demonstrating the power of strategic free zone positioning. From Singapore's tech-driven growth and strategic Asian access, to Switzerland's unmatched stability and pharmaceutical innovation, to the UAE's tax-free, fast-paced opportunities with record-breaking market performance, these three countries make global investing not just possible, but powerful. Your capital could grow faster, safer, and more securely than you imagined if you choose the right place and understand the regulatory requirements. So, where would you invest? Drop your answer in the comments, hit like if you found this valuable, and subscribe for more insights into the smartest ways to grow your money worldwide. Think global, invest smart.